particular committee of creators. Committee of creators, they will take a decision which plan is to be accepted and which plans are not up to the mark. All these things, the decisions are to be taken by the particular the committee of creators. But this is not a simple task. Today, lot of complaints are also happening. In one case, particularly in Hyderabad, the resolution profession, the prospective resolution applicant, he has submitted 250 crores. But whereas the resolution professional, he have finalized around 72 or 75 crores. So it is almost 300 times. Here, if at all the COC is arguing value max, the commercial wisdom means courts will not accept. So the amount is 250. One person submitted 250, but whereas they finalized 75 or 72 like that, which is not a commercial wisdom. It is not comes under commercial wisdom. Some hidden agenda is there. So here, while verifying the resolution plans, utmost care is required. So the accuracy part, marks part, even in that particular case, one prospective resolution applicant, they awarded extra marks, which he is not eligible. Then now the case is in Honorable Supreme Court of India. Now the Supreme Court will take a call how they are going to give the judgment. That also I am they waiting for the. Here, if at all we are using the personal bias or favoritism, then later on we have to face the problem. So that's why the whatever the particular the resolution plan, utmost care is taken to be taken by the resolution plan. Decision to be taken by the COC. But whatever the works, whatever the groundwork is there, that is to be completed by you only. So now I will discuss up to 5 o'clock today also with regard to the resolution plans and what parameters I have to look into. All these things. Today, if at all any resolution profile, there is the prospective resolution applicant submitted a plan. If that person is in the line of activity, take for example, chemical industry. If at all the prospective resolution applicant is also in the line of chemical industry, then the success rate of the takeover of the company will increase. But if at all he is in the line of activity of real estate and he is contesting for chemical industry, some doubts may be there. So the line of activity is also very important. And now all these things I will discuss in detail. Under IBC, the resolution professional play a pivotal role in ensuring the CIRP is conducted in a transparent manner. Nobody raise a question. Nobody raise a comment about your work. If at all are followed in total, then nobody will question you. Even adjudicating authority also, he will not raise his tone. Even IBBI also, no question of the remarks during the specific or random audit. Transparency is required. Today, what is happening? Some hidden agenda. I need not discuss about what is the hidden agenda and all this. It should be fair. Once I am given a task to evaluate, suppose I take for example, if at all any paper evaluation is there, if at all I am doing a wrong thing and the paper quality is less and I awarded a 90 out of other out of 100, I awarded 90, then it is a wrong. This is evaluation matrix or resolution plans also, which is the best plan. Accordingly, you have to give due weightage in the evaluation matrix. It doesn't mean if at all that a person scores higher marks, definitely he may not get it. Because so many factors are contributing. So that's why compliant, whatever the compliance is there, that is to be fulfilled. He has to pay the CIRP cost. He has to pay the operational creditor minimum liquidation value. All these things and value maximizing manner. Being a RP, always value maximization. Now you tell me 251 person is filed and 72 another person is filed and he awarded for 72 and 250 is declined. Is it a commercial wisdom or value maximization? No, it is not a value maximization. Had it been happened, 250 is happened, then he will not face the personal guarantor to corporate debtor also or corporate guarantee also. So here, today what is happening means some hidden agenda is there. Due to hidden agenda, they are bypassing the particular regulations or rules of the CIRP like that. One of the most critical responsibility of RP is the receipt. You have to receive the resolution plans. You have to give the wide publicity. It is not a closed doors. Give the wide publicity. If at all 100 resolution plans, verify it. Take the time. Who is a correct person? And accordingly, you have to give due weightage in the evaluation matrix. And you have to guide the COC also. If at all they raise it some question, out of this 100, why you have given this person full marks when compared to others? You should be in a position to tell what is the strength of the particular resolution plan and the examination. Don't be slipshod. Each and every page, each and every line, what he is offering, how he is going to pay the amount, how he is addressing the issues, how he will run the company in future. All these things you have to, you are the businessman. Why I am calling you are the businessman? You are the CEO of the company. And when you are handing over the company to another person, definitely you should verify thoroughly. Verification. Each and every way, whatever he is offering, how much he is going to pay to the operational creditor, how much he is going to pay the financial creditor, how much he is going to pay to the home buyers or dissenting financial creditors who is not given any voting right or not participating in the COC meetings. And what is the value of the asset? How he is quoted? In that particular case, what I told earlier, that the value of the property is around 250 crores. 250 crores, if at all they finalized 72 crores, man, is it a commercial wisdom? It is only purely a recovery of the financial creditor. Today, even I am the banker. Bankers or financial creditors always thinking about particular this one, how to recover, when I have to recover. If at all during this financial year, if at all I recovered, I will get the performance appraisal in my annual report. Thereby next year I will get the promotion. Their thinking is like that. Even though we are talking about the going concern, value maximization, it is not a recovery, it is a resolution plan, all these things. But implementation, it should not arise. So, particularly presentation of resolution plans, you have to give the presentation. If at all 100 is there, 100 you present in a screen to the COC members. This is the first resolution plan submitted by XYZ company. These are the parameters I have evaluated. The strength of the proposal, the weakness of the proposal, like, and how much he offered. What are the areas he is not going to pay? All these things. You have to give the presentation. If at all you put that 100-way resolution plan on the COC, the meeting table, it is not correct. Even though on the top evaluation matrix is there, but you give the presentation. If at all 10 is there, give the presentation. So this is the first proposal. So these are the strength of the proposal. These are the weakness of the proposal. I have awarded the marks like this. Transparency is required. Submitted by the prospective resolution applicant before the committee of creditors. It is an art as well as science also. That's why IBC is not a purely a legal profession. It is a management profession. Once you are acting as a CEO of the company, you are the managerial person, blended with the law also. That is a code or regulation like that. The resolution profession is not merely a post office for transmitting the resolution plans to the civil. It is not a postman duty. Simply collect that one. Whatever the arithmetical calculations are there, file it and sign it and give it to. No. You are the examiner. You are the moderator for that particular resolution plans. That's why out of 100, they have the marks are to be allotted. That discretion has given to you. That delegation of power is given to you. You have to use that power in a perfect manner. The RP must undertake thorough legal knowledge, financial knowledge, procedural knowledge, technical knowledge, regulatory knowledge in the particular area of the business. So whatever the regulators are there, the regulators, particularly for each and every sector, whether it is a power sector, who is a power sector regulator, if it is a real estate, the regulator is RERA. Examination for each resolution plan. No, I know XYZ person. I am giving marks, remaining haphazardly, whatever I wish, I am giving marks. Close that issue. It is as good as a tender system. People are participating. Here in the tender system, you may see the L1, lowest one, but here H1, highest one. To ensure compliance with you have the resolution plan compliance with the IBC, the CIRP regulation, the relevant regulations of IBPA also. Whether it satisfies these regulations or compliances or not, that is to be verified by you. Judicial precedents. Okay, simply that whatever it is there. In addition to that, the NCLT or NCLET or Honorable Supreme Court to judicial pronouncement, that also helps a lot in finalizing the particular resolution plans. So even though commercial vision, the power is vested to COC means 250 worth of a property. If at all you are awarding to a 72 crores person, this is not a commercial vision. This is not a value maximization. So from time to time, whatever the judicial precedents are there, particularly on the resolution plan, go through that one. Why the NCLT declined that one and why the NCLT asked you to award more marks to this one. Today, even prospective resolution applicants are also approaching the adjudicating authorities. Sir, what is the drawback in what is my drawback in my resolution plan? Tell me, sir, whether it is weak when compared to the successful resolution. Okay, you're talking about the commercial wisdom is there, correct? Up to certain extent, not to a large extent. If at all 250 crores, particularly 250 crores worth the property, if at all the RP is simply awarding to 70 crores a person, it is not correct. No court will favor the RP. The request for resolution plan. Whenever you are giving the request for resolution plan, you have to give the particular, you have to provide the information memorandum. The information memorandum, yesterday I dealt with the information memorandum. It is a marketing brochure. All particulars are to be mentioned. And you have to, the confidentiality, all these things. And the evaluation matrix also you have to provide. If at all any doubts are there, you have to clarify the evaluation matrix. You have to clarify why, what is this one, sir, under this head, what are the areas are to be covered or how you are going to assess? Because I am a layman. I don't know about this one, but you tell me the areas you are looking to, and accordingly, I may present my case in a perfect manner, in a correct manner. Applicable laws. Whenever your evaluation is the process is on, what are the applicable laws? Particularly, that project is a RARA. Whether the RARA Act is applicable or not, sectorial regulations, whether it fulfills or not, even tax laws, that is fulfilled for this resolution plan or not, competition laws, Competition Commission of India also you have to inform before finalizing the, if at all any mergers are happening or their stake is more, definitely that also. Not only that one, whatever the FEMA, whatever the FDI, Foreign Direct Investment or Foreign Exchange Regulation Acts, whether it is applicable or fulfilled or not. Some of the people they told, sir, once you finalize, I want to expand, I want to get the foreign direct investment, etc. Whether it is a normal route or approval route. So, all these things. Environmental, whether he is going to implement the ESG, environmental social governance, whether the waste management or pollution problem, water or air, whether he is going to implement. Otherwise, if at all I'm handing over this company not in safest hands, then it creates a problem to the society. The prospective resolution applicant may offer higher. Once they offer higher, if at all, I'm always maximization means if at all he is disturbing the society by creating the water pollution, because here whether he's a competent person or not, here the money is not the criteria. If you go into the details also, at the same time tomorrow also, how to evaluate with the resolution problem with the help of the evaluation matrix. These are the important areas. Sir, the code as well as regulation that default, it will be implemented. Okay. But you are a CEO of the company. You are the running of the company. That's why last class is you are acting as a CEO of the company. What are the various functions? How to get the benefit from finance department by the resolution professional who is acting as a CEO of the company, or personnel, or HR, or marketing, or production, all these things. You should act as a complete man. It is not a purely one law-oriented profession. So the environmental, whether he is going to, suppose the chemical industry, how he is going to dispose this one? Whatever the wastages are there, whatever the effluents are there, and labor laws. Because whether he is there competent or not, today the labor code is there, the four codes. Whether he is going to implement that code properly or not, it is not a money criteria, money that like tenders, who will give the least quotation, or in this cases, who is giving a highest quotation. Other parameters are also to be taken. But in the earlier case also, 7250, they are arguing other parameters. Okay, what are the other parameters you have to look in, and what are the drawbacks in 250 crores, whether the parameters are missing or not? Today, the Honorable Supreme Court, definitely they will ask. Part 1. The legal framework governing the resolution plan. So here, once it is then you put that evaluation matrix, stapler it 5, 10, 20, total 60, or like that. No, for each and every parameter, the rationale is there, the logic is there. So all these things you have to follow. Legal framework governing a resolution plan. What are the areas? Part 1. The relevant legal provisions for finalizing the resolution plans submitted by PRAs are: first one, our code, that is insolvency and bankruptcy code. Section 25, subsection 2, clause H, invitation of the resolution plan. Whenever you are giving that invitation or expression of interest, what are the conditions you have mentioned? Whether the same conditions are fulfilled or not, that is to be verified. Whatever the eligibility criteria, 29A disqualifications. If at all the prospective resolution is having a disqualification, but he is quoting a so big amount, still in that case also the 250 and 75. The 250%, he is eligible. not disqualified under 29A. Like that, Honorable Supreme Court also, one by one, they will filter. Whether he is a disqualified 250, no, sir. He is not a disqualified. In that case, why however decline that one? And 30 submission and examination of the resolution before last date. In that case, particularly what I told, first one is value maximization not happened. The second one, marks are awarded higher marks without any logical this one to the selected or successful resolution applicant. And he has given a grace period for payment also without a COC consent. Without a COC consent also, he has given a evaluation matrix higher marks, which is not correct. Not only that one, those debt which is satisfied and paid, that person also, the resolution professional put in the COC. Without a debt, he is using the voting right, which is not correct. It attracts the disciplinary action of the IBBA. So here the submission and examination of resolution plans, approval of the resolution, and once they approve, that is to be submitted to the Honorable NCLT for final approval. And he will also verify. He is not encroaching the commercial wisdom concept, but he will verify prima facie whether the code or regulations are fulfilled perfectly or not. If not, he will decline the final approval of the resolution plan also. But 32A, immunity provision, clean slate to the corporate data and its assets from prosecution and investigation. And if at all he is an MSME borrower, we have to give the due weightage. That's why the PPIRP is also introduced. The MSME is one of the important sector in the economy. And they are contributing a lot, 40%, particularly the exports or GST contribution, employment generation, regional imbalances, all these things. In that case, okay, they failed to repay the loan to the financial creditor or operational creditor. It doesn't mean he is a defaulter, willful defaulter. If at all earlier loans he has taken and willful defaulter, that is a different issue. CARP regulations. While finalizing the resolution plans, you have to see the CARP regulations are fulfilled by the prospective resolution applicants or not. So invitation, if at all no invitation and submitted or last date submitted, after last date is over, he submitted. Next, 36B, request for resolution plan. What is the date? What is the last date? And whether they fulfilled or not. Mandatory contents of the resolution plan. He has to pay the he has to bear the CARP cost. And he has to pay the minimum operational creditor, whatever the liquidation value is there, that is to be paid. And the approval process, section regulation 39 and 39A COC approval and 39BCD avoidance and monitoring committee, etc., etc. So whenever you are finalizing that resolution plan, whether it fulfills the CIRP regulations or not. And at the same time, you have to verify the various judicial pronouncements also. Various judicial pronouncements also. Because if you see the SR and Steel, SR Steel India and Satish Kumar Gupta, they have highlighted about the resolution plan. In the similar manner, case Sidar versus Indian Overseas Bank, they highlighted about the resolution plans finalization. And ArcelorMittal India Limited versus Satish Kumar Gupta, some this one is also there, particularly resolution plans. And Swiss Ribbon Private Limited versus Union of India, it is also covered the resolution plans. And JP Kingston and Boulevard Apartments Welfare Association versus NBCC. There also they commented about the adjudicating authority or Honorable Supreme Court. They commented about the resolution plan or commercial wisdom. What they have commented and whether that is fulfilled or not. In your case, you cross check that one. And ABEX Singapore Private Limited Committee of Creditors, EduCom. So here also, whenever that's why the judicial pronouncement with regard to resolution, whenever you are today, the ICAI, Institute of Chartered Accountants of India, IIP, they are also publishing beautiful books. That is a free book, that is a PDF books are available. ICSSI, ICSI, the IPA also, they are also, they are also IIP also, they are also brought out some books. Have it. And whatever the areas, today, they are also publishing area-wise in public as an announcement. What are the case laws or a resolution plan? What are the case laws? Like that sub-process of CIRP process. Now, part 2. The role of the resolution professional in resolution plan verification. You have to verify thorough, no dilution, nothing. And what are the areas are to be looked into by the resolution professional while verifying the resolution plan? The duties of the resolution professional. You have to issue the invitation for expression of interest. For inviting the particularly the resolution planner. So the basic criteria, and after that they verify, and then only request for resolution plan they will give, they will call and they will offer. Verification of eligibility criteria, the net worth, the line of activity, or 29A the disqualification, preparation of information memorandum for resolution plans. The basic document is IM. That is to be prepared by you. And that once you are requested for resolution plan, those people you have to give the information memorandum. Issuance of request for resolution plan and a receipt of resolution plan before time or on the last date, ensuring confidentiality. You should not reveal to anybody. No, I received 10, I received 5. One is the highest is this one, lowest. No, it is a confidential information. Next, a verification of resolution plan and a compliance test. This is a very, very important. Scrutinizing the resolution plan. RMC. You sit and pleasant. During the finalization, no one should be involved. You yourself open all these things and verify one by one, one by one, one by one. And if at all complete date, the 1 day or 2 days completely devote for finalizing the resolution plan. If at all during the working hours, if at all you are doing, then the possibility and the probability of error will arise. And particularly verification of resolution plan and a compliance test. Whatever the compliance is there, whether the compliance 29A compliance or whether their net worth is good or not, what supported document they have provided. So evaluation matrix implementation and placing the complaint before the COC. This is your responsibility. And file the approved plan NCLT, assisting COC in informed decision making. You are not the final authority. You are the facilitator. You are providing the information, whatever they require, all these things. Scope of the verification of by the RP. First of all, legal compliance. Whenever you are going to finalize whether that IBC code is fulfilled or not, CIRP regulations for the resolution plan is fulfilled or not, compliance with the request for resolution plan is followed by you or not, and compliance with the sectorial law, whether it is a power or real estate, like that sectorial laws are also to be fulfilled. So the legal compliance is one of the important area. Financial feasibility, availability of funds. Whenever I am offering everybody, I will take the company, I will submit the resolution plan. But what are the sources? Whether the sources are genuine or not. If at all the sources, any confirmation letters are available. Suppose he is going to acquire the 200 crores project. If at all any bank sanction letter is there, then some confidence. Or any guarantee is there, some confidence. Or if at all is a big group of companies and the balance sheet size big, then confidence level. Or else, if at all he is showing the bank balance, confidence level. Bank guarantee, confidence level will increase. The sources of funds, that is to be verified. Today, what is happening? Even to some of the people, that I will take over the company for 500 crores. If at all you are tempted, then later on, if at all he is not getting that source of fund, then the process will start from square one onwards, which is a time taking, which is a costly. The sources of funds, confirmation. Confirmation means you have to investigate. They will, you will ask some letters. If at all you ask 100 letters, they will provide. Whether it is genuine or not, you don't know. You bring a confirmation from a bank. We propose it to sanction so and so. Whether it is a branch, bank branch, they have given that letter or not, we don't know. And the financial projections. So some of the people, they are not paying upfront. So if at all 500, I don't pay that total amount 500, first year 100, second year 100, third year 100, fourth year 100, or fifth year 100 crores like that. Whether the financial projections are correct or not. To pay that 100 crores, whether sales is there or not. Once the revenue is there, after deduction of the cost, whether the surplus is available or not. If it are not available, it is a bluffing, and there are some people. What is there today? What is the doing means they are also contesting. Some companies they are contesting. If at all they got this, they will sell to others also, or sometimes the same corporate data. Today, this is a biggest market. Some of the people, suppose the corporate data is there. Once the resolution plan is approved by the Honorable NCLT, whatever the other than that, government dues, income tax, GST, all are waived. Again, he will purchase that company with a small amount by writing of all the government dues. Had it been continued in his name, definitely he is liable for paying the government taxes, etc., etc. So the financial projections are important. Suppose you take, for example, the maximum capacity of the company is 10,000 units per annum. Example, small example. But the production capacity is today 9,000 and maximum is 10,000. And the projection next year, if at all the prospective resolution applicant mentioned 20,000, how it is possible, boss? Tell me. How it is possible? Because next year you are telling 19,000 or 20,000. The plant capacity is only 10,000. As on date, the capacity utilization is 9,000. How you are going to manufacture 20,000 without new machinery? If at all the new machinery is there, have you factorized the capital expenditure in your budget? So the financial projection today, even banks also, the projections, the Reserve Bank of India, some of the units are failed on account of bubble projections. Bubble projections. That bubbles may burst at any time. Bubbles may burst at any time. To get that particular loan, particularly the working capital, some of the companies, they will project, sorry, this year 100 crores sales, next year 200. But if at all you see the sector, industry sector of that particular sector, only the growth rate per annum is 5%, but he is projected 100% growth. Okay, 100% growth. If at all he is competent enough, okay. But where is the mission capacity? So that's why the projections sheet you have to verify. Sustainability. If at all I am going to hand over that particular company and I am handing over in the safest hands, then continuously the company will be groomed like anything. If at all I am putting that particular company in the bad hands, then further destruction will happen. It impact on the economy also. The role of the professional is the company should be handed over to a safest hands. The sustainability continuous. Today the company is facing problem, and if at all I have handed over in the safest hands, then sustainability will be there. Otherwise, no sustainability. Technical feasibility. Okay, that person came. He is an expert in print media, like Deccan Chronicle or Nadu or Indian Express, but he wants to do chemical industry. Array, that is a print media. This is a chemical industry or infrastructure or real estate. But matching is not there. Definitely the success rate will decrease. So you have to think whenever the resolution plan submitted, you have to think about all these things. The company to be given to safest hands. Operational viability. So operationally viable or not, feasibility, technical feasibility, operationally viability or not. He is telling, I will continue, I will run the company. Okay, as on date, the machinery is a rusting condition. Without additional deployment of fund, the wheels of the machinery will not move. So in that case, operational viability. So whenever the company last of 2 years, the company is shut down, and if at all he is deployed additional funds, then only the movement of wheels will happen. And if he is only contesting this one and not talked about the additional funds, operational continuity of a business, whether he is capable or not. Some other people, they are acquiring this company and they are reselling that one. To my knowledge is concerned, in one case, what was happened? What was happened? Only 1 minute, sir. Only 1 minute. Now the continuity of a business. Today, what is happening is some of the PRAs they are contesting and they are purchasing, and after that, what they are doing means they are dismantling that particular plant and machinery. They are selling to others. The land is split into the particularly residential plots, and they are selling. It is as good as a liquidation. Liquidation is nothing but a death of the company. But why we are preferring CARP? Because once a CARP is happening, once the company is they renovated or started, the employment opportunity, the GDP will increase, the government tax like a GST or particularly the income tax they will receive, and the economic growth will happen. So what these people are doing, continuity, simply they are acquiring and dismantling all these things. In only one go, they will pay the amount, bullet payment, technology capability. Once this is a defunct company, the company may have the outdated technology or a redundant technology. Once the redundant technology, outdated technology is there, how he will run and earn profits? Some additional funding is required, like additional funding for technology or cloud computing or artificial intelligence. Whatever the latest the technology is or electronic the instruments are there that is to be used to reduce the cost of operations. You have to verify whether he is technically capable or not in the existing. So whenever the resolution plans are submitted, he will give the brief about his company. In that company, what is happening? That also we have to decide. It is not simply mathematical calculation. 2 plus 2 is equal to 4. And commercial viability. Okay, I am acquiring the company. I am the prospective resolution applicant. The selling price, if at all 100, my cost of operation should be 8. Even after taking over the particular company, if the cost of operation is 110, my selling price is 100, then further loss, a second round CIRP will start. To avoid that one, whether the cost of operations or the fixed cost maximum utilization or cost control measures, all they have to. That's why business revival potential. How you are going to revive? Okay, I'm giving the company. How you will revive? No, sir, I'm giving this much amount, sir. Don't talk like that. How you are going to revive the company? Today, for the last 1 year, the company is in not operation. Machinery, the staff is not there. Electricity connection disconnected. Some of the generators are not in working condition. Water systems are not in place. How you are reviving the company? Tell me. Cash flows sufficiency. The debt service coverage ratio. The debt service coverage ratio. Suppose every year, after the tax and all these things, he is getting 100 crores. But whereas he is promised to pay 150 crores, how he will get the 150 crores extra? From which source he will get? So that servicing capability is also required. Today, even bankers, okay, what is your revenue? What is your cost? What is your surplus? What is the tax? After tax, what is your earnings? Whether earnings are sufficient to pay the particular term loan installment, that is called a debt service coverage ratio. If that is not happening, if at all your restructure that total amount in 2 years or 3 years, how he will pay? The prospective resolution applicants are all people, they are not taking the company total amount paid like cash and carry type. That is not possible. Some other prospector, sir, I will take over the company, sir. First initial payment I will pay 50 crores, sir. Remaining 150 crores I will pay in 3 installment. That to first year ending, second year ending, third year ending. Okay, that is a deal is okay. But you have to verify whether he is capable of getting 50 crores, 50 crores, 50 crores first year ending, second year ending, third year ending or not. The debt servicing capability is also required. Otherwise, don't give even 100 crores. If at all one person is giving upfront, you give it to them. Instead of 151, if you calculate the time value of the money with the capital budgeting techniques, that is net present value money, that after 1 year 50 crores, what is the present value? After second year 100 crores, what is the present value? What is third year 50 crores, what is the present value? And how much it will come? Instead of that, it is better to give 100 crores. Prima facie, it is appears to be high. Implementation capabilities. Also, you have to see. He is inexperienced persons. They don't know ABC of that particular company. How he will run the show? Because earlier person, the show is not up to the mark. That's why the company is under CIRP. How he will manage the company? Competency level. Suppose Enadu newspaper is there. Earlier, Deccan Chronicle is also under CIRP. E-Node company is capable of handling Deccan Chronicle because both are in print media. And the E-Node, the newspaper, plus Ramoji Film City, or the subsidiaries like Pickles and so many things are there. Electronic, they are having funds and they are managing the show. Why? Because once they are in print media, to manage the another print media, it is very easy for him. Thereby, the sustainability will happen. Because here, always don't look into the amount. The company should be even after finalization, the company should be going concern, and it adds to the economic value to the economy by way of employment, by way of GDP, by way of GST, by way of income tax, and regional imbalances. If at all our industries are killed, the region will, the people will migrate from that region to other. That's why the industry experience is required. The industry experience. Suppose I am the banker, and if at all, normally the bankers, they are having good knowledge in all sectors. Why? Because once the borrower, aviation, we will ask how many sectors you are flying, what is the flight cost, from which country, whether you are having any FDI or any government approved route or automatic route, and what is the supply demand. Like that, we are having a little bit of knowledge in all sectors. Why? Because once I am satisfied, then only I will give the loan. But some other people, they may not have. The industry experience is also required. Timeline implementation. If at all they are asking 20 years or 15 years means no. By that time, number of players in the economy will increase. And this demand supply mismatch will happen. And whatever the time he has given, whether he will pay back to me or not, all are question marks. So the timeline, if it all a quick pay back, I'm giving the company pay back. So if at all you are giving the whatever the final amount is there, if you pay within 1 year, I'm happy. 2 years, okay. 3 years also, further okay. No, no, sir, I will pay 10 years, sir, because I have to get the profit now. If at all you are not having that much confidence level on the running how to run the company, then no, boss. Sorry, I'm not interested to hand over the company to you. But then I will give the marks accordingly in the evaluation matrix. Monitoring mechanisms. How he will monitor whether the company is in right path or wrong path, whether any budgetary control system is there or any standard costing system is there. All these things, monitoring mechanisms are also to be verified. That's why some of the people that take like evaluation matrix, oh, evaluation marks, 20, 10, 5, 7.5, whatever the nonsense is there, they will give and total it, sir, this is highest marks, this is the lowest marks, like that. Each and every parameter is having its own value. Part 3, stage-wise verification. The stage-wise verification. Sir, are you getting my point, sir? What I am telling? Sir, madam, are you able to understand? Hello?
Yes, sir. Yes.
Ah, okay, sir. Okay. Part 3, stage-wise verification process. What is a stage-wise verification process? Pre-receipt stage. The pre-receipt stage and preparation of a request for resolution plan clearly contain whenever you are a request for resolution plan, what is the eligibility criteria? What are the parameters that are there in the evaluation matrix? Next, what are the timelines for submission of the resolution plan? What is the submission requirement? What are the, along with the resolution plans, what are the other papers or documents or guarantees or affidavits, that is bid security requirements and mandatory undertakings and affidavits and confidentiality conditions, format for financial proposals and conditions precedent or performance security. So this is to be clearly defined. No, there is no scope for ambiguity. There is no scope for ambiguity. So whenever the request for resolution plan is requested, these areas clearly mentioned. Otherwise, if at all PRA is thinking in a different manner, your thinking process is different, then it will be a problem. Compliance checklist. The RP should prepare the legal compliance checklist. If at all you are having checklist for each and every parameter of the evaluation matrix or the resolution plan, then once or twice if you read and start the evaluation process, definitely the quality of your resolution plan will increase. You have to prepare the legal. What are the legal compliance checklist to verify the resolution? What is the financial checklist? What are the financial parameters I have to check in the resolution? Prepare that one. And what are the documents to be attached by the prospective resolution applicant? That also you please verify. Or the section 29A checklist, ready-made. Because even though again you need not open that particular book, the code, IBC code. If at all that checklist is also ready, then it is very easy. And the evaluation matrix sheet also. What are the broad parameters? And a scoring mechanism for each and every matrix. What is the scoring? And comparative analysis, particularly the analysis template, all these things are to be. It is a compliance list. Next one is receipt of resolution plan. Next, preliminary scrutiny. Once the resolution plan is received, immediately upon receipt, verify submission within timelines. Whether the resolution plan is submitted within the timeline or not. Sealed and authorized submission. And it should be sealed. The authorized people only they have to submit, not by others. And digital signatures. If at all they are submitting through online, digital signatures and bid security deposit, if any, and a complete annexes along with that particular the resolution plan. Complete annexes are to be attached and affidavits Whatever the affidavits are there, that is to be enclosed. Suppose if companies are submitting the resolution plans, their board approval is also required. That board approval is there or not. Sometimes, if a managing director is not there, who is the authority to sign on the document? Then he has to give the power of attorney to sign on the document. That is also required. And financial proposal and implementation schedule, all these things are required. And you have to verify in the preliminary scrutiny. In the preliminary scrutiny. Next one is maintain confidentiality. The RP should assign unique identification number for each and every resolution plan or prospective resolution applicant. Maintain a secured data room. He has to allocate one room exclusively to preserve all these things. Otherwise, if at all the secrecy is lost or confidentiality is lost, then it will be a problem. And restrict access. That room, whatever the room is there, the data room, only RP, not by others. And record plan receipt register. Plan register, resolution plan, receipt register. You have to maintain. When it was received, the time, the date, whether it is by speed post or courier or personal handing over, maintain audit trail. All these things are required. Part 4, detailed verification of a resolution plan. So you have to verify in detail the resolution plan. What are the details you have to verify? One of the most critical function, section 29A. The first one is a 29A. In the 29A, today, some of the people are, we are giving the certificates and that is valid like that. So far, IBBA is not given approval for these people are certified people. These people are not certified. That type of list is not provided by IBBA. But whoever is providing, they should have the background, the data availability, the data, historical data of all companies, all directors, and whatever the press media, whatever it is, all ought to be ready. This is one of the most critical function, the 29A. So today, as I told earlier also, some filtration should be happened from your side for a verification of 29A. First of all, you do one thing. Commercial CIBIL report. Commercial CIBIL report. What is meant to a commercial CIBIL report? Company. Based on the company PAN number, they will provide the commercial CIBIL. Commercial CIBIL. So verify that one. How many loans they have taken, any willful defaulters there are identified and mentioned in the CIBIL report or not, and RBI defaulters list, etc. How many directors are there? The directors are particularly though the prospective resolution applicant, that company directors. You go to the ROC website with the help of DIN. These directors are controlling how many companies. Is there any disqualification of the directors as per the Companies Act? So verify that one. Not only that one, the director's individual CIBIL also. Earlier, you have taken the CIBIL report company. Now you have to take the individual CIBIL also. Individual CIBIL. Next one is this is one of the most critical function. Any suits are filed against this company or the directors, or whether the directors are involved in any criminal activities or any ECGC, Export Credit Guarantee Corporation. Some of the directors' names are also reflected in Export Credit Guarantee. If at all the companies are manufacturing the goods for exports, if these company directors are doing wrong things while exporting the goods to the other country, that list is also available with the Export Credit Guarantee Corporation. And these directors, particularly the CIBIL report, also you have to verify. Then today, what is happening means the 29 is a broader area. Broader area means for that we have to take the assistance of some important companies like Dun and Bradstreet. If at all you pay only 10,000, if you require the company, the director's history for the last 10 or 15 years, then the Dun and Bradstreet they will provide, or the company they will provide. So, like that, some reputed companies are there. So, small amount, if you pay, and they will give the report. But today, what is happening? Everybody is telling that the 29A verification, I will do it without a database, without a computer systems, without any historical data files are not available. How we will simply through web? It is not possible. Simply through web, it is not possible. This is one of the critical functions of the RP, documents of time. The RP should affidavit of 29A. Even though RP has to verify, still some further verification is also. The further verification means the company, they have to provide that affidavit also. The affidavit 29A, the list connected persons, and the group structure of the particular company who is going to file or file that one, and the shareholders structure and the pattern, directors details, and the directors details, all these things. Only 1 minute. So the director's details and the auditor certificate, particularly the company audit certificate and the banker certificate for that particular company, whether their accounts are good or non-performing assets, and the credit reports of the particular company, and the litigation disclosure and NPA declaration, that documents are also to be obtained from that particular prospective resolution applicant companies. That is very much required. If at all from your side also you have to verify, and at the same time the company side also you have to verify. So you have to take from the PRA the affidavit under section 29A and a list of connected person, group structure, sharing pattern, and shareholding pattern, or the director's details, or auditor certificate of the particular company, and the banker certificate from their bankers. What is the CIF, credit information file, the credit information report, CIR report, that is also they will get, bankers will also get. how many loans they have taken, what is the present status, whether they are regularly paying or not, and that is called credit reports, litigation and disclosures, and NPA declaration. Detailed verification areas. One by one, we will check up. Clause A, undischarged insolvent. Because the 29A is a big area, difficult area, and whatever the insolvency records that are available, we have to verify the company as well as the director's house, the court proceedings, and the public database, if at all available. That also we have to search, we have to arrive a conclusion. So undischarged insolvent, I have to confirm because the RP has to confirm that he is not a undischarged insolvent like that. Next, clause B, willful defaulter or not. That is also have to confirm by the RP, RBI willful defaulters list. That you have to verify. The bank confirmation. Suppose take for example, if at all this person is availed any loan from any bank, whether the loan is standard or non-performing asset, that also I have to verify. And the bank, the credit information companies like CIBIL or the CRIF Highmark or Experian, like that, four companies are there. From the four companies, if you provide the PAN card number or Aadhaar number of the directors and the company PAN number, definitely they will also provide that information. RBI circulars compliance, RBI circulars are also sometimes they are providing to the bankers. That is also to be verified. NPA accounts. So whether they are having the NPA, today open banking system is there. In the open banking system, so one person, how many banks he is having, that information also available from one bank. Take for example, in State Bank of India, if at all I am going to give any loan to anybody, then I will take the PAN number, Aadhaar number. If I key that one, then it will travel all the banks and collect the information. This particular person is having this much deposit, this much loans and different banks like that. Not only that one, Chris, particularly Chris, not Crisil, that is centralized. CERSI website is also there. And a period of classification. If at all that the accounts are turned into non-performing, the period, overdues are cleared or not, connected entries of NPAs, all these things are also to be verified. And clause D, criminal convictions. 29A, in clause D also, court records or MCA disclosures and self-declaration. Even today, the particularly state level, the police also they are maintaining centralized data with Aadhaar number. If at all that Aadhaar number is given in that particular their server, then automatically it populates. If at all any criminal cases against that person is there or not. Next, disqualification under Companies Act, that is clause E. So MCA records you have to verify, and DIN status, director index number status also you have to verify, and arrive the conclusion whether this director, the company directors who submitted the prospective resolution applicant is having the disqualification or not. That also we have to verify. Not only that one, SEBI prohibitions, and that is a clause F. SEBI prohibitions are also to be verified. That is a SEBI orders and a debarment of the records like that. So if at all we provide that information to the appropriate authority, particularly SEBI, then they will provide. They will also cooperate in this area. Or ROC also, they will also provide that information in these areas. So clause D is promote a corporate data with the preferential or fraudulent transaction. So avoidance application or NCLT orders or a transaction audit report. Through that also we can arrive a conclusion whether that a prospective resolution is involved in this area. And particularly the clause H, enforceable guarantee invoke, guarantee invocation notice. Suppose the banks are also, the companies are taking guarantees, but guarantees are also invoked. Once invoked means notices they will serve and outstanding liabilities. Today, in the coming future, centralized data servers are definitely it is available to overcome the problem of 29A, which is difficult in the CARP process. Disability of the foreign jurisdiction, the international sanctions or foreign insolvency records and the regulatory actions that are to be verified. So here, some of the areas it is not, it is very difficult for you to handle. Then you have to take the services of, as I told, even State Bank, my bank also, whenever we want to know the credentials of the director, the credentials of the company, then we will pay 10,000 by recovering from the company or recovering from the director and send that amount to the particular Dun and Bradstreet. They will give a good report about that particular the director or the company. The data, that is data 50 to 60 years back data is also available with them. Through that data, then we will get some information. Instead of nothing, something is better than nothing. So if at all, no, it is very difficult. We should not leave it like that. We have to take some precautionary measure to overcome this problem. And connected person, verify the entire group structure carefully. Then only we will get the some information about the connected person. That is clause J in the 29A. So here, then these are the various areas which are important in the 29A. So now we will take for a break for 10 minutes. After that, again we will start. 10 minutes break, sir. Is it okay, sir? Hello?
Yes, sir, it's okay. 10 minutes break, yeah.
Next one is the verification of mandatory requirements. This is under section 30, subsection 2. What are those areas? The RP must ensure resolution plan complies with the section 30, subsection 2. The section 30, subsection 2 of the IBC mandates that the RP must ensure that the resolution plan provide for specific minimum payments before submission of a COC. It requires priority payment of IRPC, that is insolvency resolution process cost, or minimum payment to operational creditor, that is equivalent to the liquidation value, and the dissenting financial creditors and compliance with the loss. So these are factorized in the resolution plan or not. That is to be verified by the resolution professional before submitting the resolution plans to the particularly the COC. Payment of CIRP cost. Verify in the resolution plan the full payment of a CIRP cost is there or not. And the priority payment provision as per the waterfall mechanism and sources of a payment, how he will going to pay, whether existing sources are there or not, or he is going to borrow some money from the banks or financial institution, that whatever the evidences are there or the proofs are there, that is also to be submitted. Next, timeline of a payment. When he is going to pay, that is a timeline also he has to mention properly. The timeline for a payment also. Not only that one, payment to operational creditors, whether the payment to operational creditor is factorized in the resolution plan or not. Verify the minimum payment requirement. So the minimum payment requirement and compliance with the liquidation value criteria. Then if at all this criteria is not satisfied in that particular resolution plan, that is to be rejected. That is to be rejected. And a priority over financial creditors or a treatment of fairness. So the fairness means a certain creditors is giving a preference, a certain creditors is not giving a preference, then that type of resolution plans are to be rejected. And management affairs of the corporate debtor. How he is going to manage the proposed management structure. Once he is taken over the company, how he is going to structure one managing director or the different functions or different people, how he is going to start. Suppose if the existing company is not having any manpower or the key managerial person, how he is going to start that particular company, one managing director or production or HR or marketing, all these functional head is going to establish or not. And the board constitution, and when he will going to start the board, and the board of directors are how many, what are they require, their qualification, all these things, and the governance mechanism, the corporate governance mechanism, how he is going to establish the corporate governance mechanism in the proposed company, that also he has to inform through the resolution plan. Not only that one, how many is going to take independent directors in the proposed company, that also he has to inform to the company through the resolution plans. And the key managerial person, whatever the key managerial persons that are required by the company. So during his particularly this resolution success, the prospective resolution applicant, how he is going to take the manpower, all these things, that to key managerial persons also. Because once that company is handed over to the prospective resolution applicant, if at all he is a successful resolution applicant, then how he will manage that particular company? Implementation, supervision, how he is going to implement the particular the company in a structured manner and in a production, and when he is going to start the commercial, if at all the company is in defunct condition, and how he will supervise through the monitoring committee, whether any monitoring committee is going to be established by the prospective resolution applicant or not. That is also he has to mention. Escrow mechanism. What is a escrow mechanism? Suppose the company is going to pay the whatever the final bid is there in 4 installment, the 2 half-yearly installment. For that, what the escrow account to be opened? Whatever their sales revenues are there, that is to be created, and whatever the day-to-day requirement through that escrow account, and whatever the installment to be paid to the particular the corporate debtor. So that also through escrow mechanism only the final amount how he is going to pay through a escrow mechanism, that is also to be mentioned. Implementation timelines. So first, when that particular basic infrastructure to be created, when the commercial production, when the new additional machinery, how he is modernizing that machinery, the modernizing that particular company, all the timelines are also to be mentioned in the resolution plan. And the milestones, how he will achieve the milestones, particularly the production capacity from 40 to 50, 50 to 60, like that. And when he is going to expand that particular company and a reporting system, all these things are also to be mentioned in the particular the resolution plan by the prospective resolution applicant. Not only that one, he has to comply with the applicable laws. So once he is going to take, if at all he is a successful resolution applicant, how he is going to implement the various laws that are. So if at all the Companies Act 2013 for that company, or if at all it is an export oriented, how the FEMA regulations are to be implemented, if at all on account of a merger and a competition, the competition commission, that how he will implement, and if at all it is a listed company and going to be listed in stock exchanges, how he will implement the listing agreement conditions of the SEBI or tax laws, particularly whether it is a income tax or other taxes, and how he will going to implement labor laws with the labor code, that is sub chapters the 4, or environmental laws. So if at all the company is going to release some, particularly this pollution areas, the water or air or whatever it is there, or the industry regulation, all these things are also to be mentioned in the resolution plan. Resolution plan is not simply the amount to be mentioned and when he is going to pay, but once you are going to hand over the company in the safest hands, what actions or what is his planning, all these things are to be mentioned. Then only that company will be a successful company, and definitely some good results will happen. Does not contravene any law. The resolution plan, the professional should obtain legal opinion about that particular company. And sometimes whatever the documents he has mentioned, whether it is true or not, he has to check or cross check that one. And a tax opinion, sometimes on account of taking the sick company or a defunct company, whether any tax provisions or tax concessions are there or tax holidays are there, and a regulatory opinion, particularly if at all it is a infrastructure or but the real estate, or if at all any power and other sectors, the regulatory opinion is also to be taken into consideration. That is also to be verified by the resolution professional, and the competition law opinion also is very much required. We does not contravene any law, any law. Now coming to the other areas, particularly the verification of regulation 38 compliance. So this is also to be complied through resolution plans. The resolution plans. So verification of the regulation 38 compliance. Resolution plan must address the insolvency resolution process cost. If at all he is not mentioned in the resolution plan, decline that one or rejected that one, operational criteria minimum amount as well the liquidation value, that is also, if he is not mentioned, decline that resolution plan. Dissenting financial creditors, they are also having priority. If that is not mentioned, reject that resolution plan. Management of the corporate data, how he is the management, particularly the data or the directors of the company, if at all they are defaulters or 29 disqualifications are there, reject that particular the resolution plan. And the supervision plan, if that supervision plan is not up to the mark, then the rejection of the particular this one, feasibility and viability. If at all, whatever the proposal he is given, if at all it is not economically viable or if not feasible technically, and then that proposal to be declined, addressing the cause of default and cause of default. If at all some companies they are irregular with their present bankers, and they are also submitted some resolution plan, and if the default is there, the default reason also to be mentioned, then only the if the RP is convinced, then only he will accept the proposal. Specific checks are also to be taken by the resolution profession. Statement on dealing with the stakeholders, on dealing with the stakeholders, and how he is going to handle all the stakeholders of the proposed company or new company or the company which is going to hand over by the resolution profession. Term of the plan, whether the term of the plan is 5 years or 2 years or 3 years, whatever the term is there, and a monitoring mechanism, how he will monitor the performance of the company, whether any budgetary control systems or any management information system or etc. That monitoring mechanism also, schedule of implementation, how he is going to implement the schedule, particularly first year I will revamp that particular production department, second year and I will expansion, all these things, and the contingency provisions. Sometimes the contingency, the whatever the plans are there, it is not to be, no, may not be achieved. In that case, how the contingency provisions he has built up, that also he has to mention in the resolution plan to be submitted to the resolution professional. And part 5, the financial verification of the resolution. Being a resolution professional, you have to verify the resolution plan, whether the financials are acceptable or not. If at all it is not acceptable, reject that plan. If at all the financial weakness is there, or financials are not up to the mark, or not up to the industry standard, then reject that resolution. Particularly the analysis of the financial proposal. He will give the some proposal. The financials are also to be verified by the resolution professional. And what are this one? Sources of funds. That is the important one. Once the sources of funds are not up to the mark, reject the proposal. The particularly the present equity is not up to the mark in the particular company, which is going to be taken over from the resolution profession. The additional equity infusion is required. He brought some equity. Otherwise, if at all he is not brought that particular equity, how the company will run, how the modernization, how the reconstruction, rehabilitation of the company will happen. So some equity infusion is required. How much he will bring, what are the sources, he has to inform well in time to the through resolution plan. Debt funding. Whatever the debt is there, how he is going to get that funding? Whether it is a debentures or bonds or whatever the term loans are there, internal accruals, year-on-year basis, how much the surplus is generated after payment of the various costs or salaries, etc., and how the internal accruals will happen, and the investor commitments. Suppose some investors are likely to be invested in that particular company. If at all any commitments are there, the letters, the exchange of information, that also. Second one is whether he is brought any private equity or venture capital. That also he has to inform well in time. Not only that one, if at all some banks are interested to finance to this particular company after acquisition, and what are the sanction letters, how much they have sanctioned, what type of securities they are taking, what is their estimates, what is the rate of interest, all these things are through sanction letters only. Authenticity of funding, simply he will tell that bank they are going to give 100 crores, sir. This bank 100 crores, sir. Definitely I will start the company in a big manner. No, the confirmation is required. The authenticity is required. Otherwise, the in air he should not talk. In air he should not talk. Net worth certificates. So if at all they are capable of bringing additional funds, first what is the net worth certificates? He is capable or not to be decided. Whether the promoters they are capable or not. How to decide? If at all the net worth is good, definitely it is not a problem. Audited financial statement. Whatever their financial statements are there, that is to be submitted along with the resolution plan. Otherwise, how I will believe that these persons are capable, these persons are net worth is good? Bank comfort letters. Sometimes these companies are already in the line of activity and they are also availed some loans with the bank. For this company also banks are proposed to give whatever the comfort letters the banks are given, that also to be provided along with the resolution plan. Source legitimacy. And what are the funds the whether is they will give? Suppose take for example, one bank he told that one bank they will give 10,000 crores. It is not possible because banks they will give up to certain level only. The prudential norms are there. They should not give more than the share capital. If at all some bank later 10,000 crores means it is not believable. And AML KYC complaints. Sometimes he will bring the amount, but unauthorized amount, which is not acceptable as per KYC and anti-money laundering system. So, if at all some people, okay, no problem, sir. How many crores it require? 1,000 crores. 1,000 crores I will bring. But if at all it is through laundering, money laundering activities, then that is not acceptable. That is not acceptable. The genuine source of funds are to be received. Then only the company will run in a better manner. Otherwise, if at all it is not a genuine, then enforcement directorate or the ED, all they will again seize that particular the assets and all these things, again the square one position will happen. Financial capability, whether the past financial performance of the particular company, whether they are getting their sales are increasing, their balance sheet size increasing, their particularly profits are increasing or not. That also you have to verify. Why? Because the confidence level to be increased. Otherwise, we should not simply hand over the company to others by based on the paperwork and other things. EBITDA, the particularly EBITDA trends, how it is increasing or decreasing, and what is the present debt equity ratio of the company, the existing company, which is going to be take our company, that is which is under CIRP, the debt equity ratio, that is also to be verified. Their company, how the debt equity ratio, whether the debt is less and the equity is more, then it is acceptable. If debt is more and the equity is less, that is not acceptable. Liquidity position, the successful prospective resolution applicant company, what is the present liquidation position? Whether liquid assets are there or not. Liquid assets means current assets or bank balance or temporary investments. If liquid assets are there, then they will pay the amount. That confidence level from the IRP, the RP will increase. And the cash flows, the cash budgets are also to be verified. So he promised to pay the amount in a the quarterly basis. With the quarterly basis, whether the cash flow is adequate or not, that is also to be verified. And the credit rating of the company, whether internal or external, the rating of the company is up to the mark or not, that is also to be verified. Then only I have to hand over the company to the others. Not only that one, stress testing plan. Stress testing plan. Suppose future is always unpredictable, but with some percentages or statistical controls, we are predicting the future. And stress testing. What is the stress test? If at all any eventualities are happened in the economy, how his funds flow will decrease, or how his revenue will decrease, how his profit will decrease, that is called a stress testing. Suppose I take for example today, on account of Iran, Israel and USA, the war, almost all economies are struggling a lot. So whatever the projections are given by him, if at all 10% the revenue less and 10% cost is more, then how the financials are there? That is called stress testing. So in that stress testing, revenue assumptions are mentioned. So this revenue is subjected to the market penetration is increasing year on year basis. Cost exemptions. The cost also, if the cost is every year 10% is increasing, this profit will generate. Sensitivity analysis. So what is a sensitivity? If a cost is increased by 5% and the revenue is decreased by 5%, what is the impact of the financials? And the market risk. Whether market risk are taken into consideration while preparing the financial statement by the prospective resolution applicant or not. And the foreign exchange exposure. If the company is dealing with the particularly the exports and how much exposure is there, and what is the volatility rate of the exchange and the interest rate risk. Today, the banks make sanction low rate of interest, and they have taken in the profit and loss account the same rate of interest. And if at all due to increase in the inflation, if interest rates are increased, then what is the impact on the financials? That also the RP has to use a stress testing plan while accepting the resolution plans submitted by the particular the PRA, prospective resolution applicant, then only that type of plans are to be accepted. Not simply, and feasibility and viability studies. Whether the continuation of the company is viable or over a period of time, whether to continue or discontinue. If at all I continue, I should earn some surplus. If at all I continued and surplus is not generated, the company is not viable. The feasibility and viability according to his plan, that plan is prepared by the resolution, the prospective resolution profession. Operational feasibility. Then availability of raw material. Okay. Whether he mentioned about the availability of raw material or not. If the raw material availability is not there, how he will run the company? How he will run the company? Availability of raw material is not there. He may acquire, and after that, the company is unable to procure the raw material. Then again, the CARP problem or sickness or liquidity problem in the company. Again, second round CARP will start. So that's why, what is his opinion? How he is going to, suppose the company raw material is a problem. It is a chemical industry. And all chemicals are to be imported from other country. Today, on account of war, that problem will arise. So whether he is depending on imported or any domestic, technology support. The company requires some technology support, whether it is available within the country or not. To run the company in an effective and efficient manner, technology support is very much required. If the technology support is not available, then again the problem will arise to the company. Once the technology outdated or redundant technology is there, the particularly cost will increase. Production capability, whether the company is going to achieve the full level of the production or not. Suppose presently the company is handling 2000 units per annum, but the production maximum capacity is 10,000. Whether the company is able to achieve the full production within a short span of time or not. If at all the companies are big companies, definitely they will achieve the capacity utilization 100%. If the management is not up to the mark, definitely it will be a problem. Supply chain continuity. So whatever the raw material, whatever the final goods, whether it is from the market to the market, that will happen or not. Today, the biggest problem in India is on account of the petrol or diesel, the supply chain management, lot of problems are there. That's a honorable minister, the prime minister also told, don't travel one person in a car, a group of person. And if at all you wish to travel, you travel in the metros or public transport, not using the cars, or you use that oils 10% less, so that imports will. So today, on account of a war, supply chain disturbed like anything. So in that case, whether the company, what supply chain, if the existing supply chain is disrupted, what are the other alternatives that are available? That also he has to explain. And customer retention, how he is going to retain the customer? How he is going to retain the customer? Why? Because if at all is whether the product quality is increased or brand name is changed or additional functions are increased, or additional characters of the product is increased, all these things he has to mention in the resolution plan. So whenever we are accepting the resolution plan, the operational feasibility also we have to assess, and the commercial viability. And whenever this person, particularly this person is submitting that plan, the industrial look also he has to mention. What is the present industrial look? Whether it is a chemical or a power or other areas, what is the industrial look? What is the growth rate? What is the profit? What is the demand supply gap? All these things are also to be mentioned. Then only the prospective resolution applicant will take a call. Not only that one, competition. The present competition, how much competition is there? The product manufacturing in the country is 10,000, whereas the demand for the product is 9,000. Thereby 1,000 surplus additional capacity is there. In that case, how he will survive? How he will survive? So the competition also he has to mention. If at all competition is more, the competition is less, and the supply is less, demand is more, success rate will increase. And future demand, the future demand of the product, the future demand of the product, the future demand, number of buyers, whether they will increase or not, that is also to be verified. Pricing assumptions. So the present price, whether the same price will continue in future or increase or decrease, that also he has to mention. Because here the simple I will acquire the company for so and so amount is not correct. Preparation of a resolution plan is a expert knowledge is required. It is a science as well as art. You have to present in a perfect manner, and by taking some assumptions. The assumptions are should be nearer to the particular the actuals, and we should not give a rough idea or a fair idea about the assumption. If a pricing assumptions, next 5 years I'm going to pay the amount with a 5 installment, so the price will constant or price will increase by 10 or 20% every year. Whether 20% increase every year means whether the people are going to purchase or not. All these things are to be verified. So the commercial viability also he has to mention. Today, whatever the resolution plans submitted, lengthy resolution plans are not there. Okay, whatever it is mentioned, the Siva is approving, and again, these people also. COC people, COC they are approving, and NCLT also. NCLT also like that. And you have to, whether the company has particularly, they have calculated the break-even point or not. What is the break-even point? So up to what time the company will not get any profit or loss, any profit or loss. So in the financial viability area, the resolution applicant, the prospective resolution applicant, he has to calculate the break-even analysis or debt servicing capabilities also. Whatever the debt servicing capabilities also he has to mention. The projected profitability also he has to mention. Whether the projected profitability is achievable or not, that is also to be verified. And working capital sufficiency. Once I am going to take the company, whether the existing working capital is suffice or not. If not, what are the sources of the working capital? That also to be verified. And management capability. So suppose the company is going to take by prospective resolution applicant of XYZ company, XYZ company, whether they are experienced of there or not in the line of activity. So the PRA is well experienced or raw candidate. Today, some of the raw candidates are also they are submitting the resolution plans. That resolution plan simply, even though they are quoting higher, that is not to be accepted. Okay, there you have to use the commercial wisdom. Why? Because even though they are quoting higher, that too they are telling that this amount will be paid in 5 years. Next, once they are not experienced, how they will achieve? How they will going to achieve this one? Their track record. Their track record is also to be verified. So the track record, whether how many subsidiaries are there, how many associates are there, how is their performance, all these things, and the turnaround expertise. So once I have given my company means the CIRP company, hand it over to them. In how many months or years the company will become a good shape? Good shape in the means not a physical shape, the financial strength. When the sales will achieve, when the profit will they will get it all, and the governance standards. Once the management is capable, if at all it is a environmental issues are there, whether it is a air or water, they will handle properly. They will handle properly. So that's why the governance standards are also whether they are having the capacity or not. Part 6. In the verification of resolution plan by the resolution professional, the resolution plan submitted by the PRAs, document verification is also. Document verification. What are the document verification? The checklist. These are to be submitted. These are to be verified by the particular resolution professional. These are submitted by the prospective resolution applicant along with the resolution plan. What are the documents? Particularly their company, when it was established, their certificate of incorporation to be enclosed. Because the RP has to verify whether it is a true company or a shell company like that. Their memorandum of association, their articles of association, that also they have to submit. What is the various objective clause? Anyhow, these are the two public documents. No confidentiality, nothing. So the memorandum and articles of association also they have to submit. And the PAN and the GST. The PAN and the GST. They have to submit the PAN number and the GST number. So that through this PAN or GST, I can guess or I can assess, I can guess or assess how much the turnover of the sales, whether the sales mentioned in their financial statements are tallying with the GST, or whatever the turnover or profit mentioned in their profit and loss account matching with the income tax returns or not. That also for cross-checking the corporates who are going to take the CIRP company, they have to provide that PAN or GST. Board resolutions. Why the board resolution? So the director simply they should not submit. They should not submit the simply the resolution plan subject to approval of the board. If the board is approved, then only the company is eligible to take. If a board is not approved, some directors they have submitted the resolution plan. Definitely, that type of pranks are to be rejected. So once any company is going to take the plan, the CIRP company, their board approval is also very much required. And the shareholding details, whatever their company shareholdings are there, that shareholdings are also to be intimated. To be intimated. So, how many shares are there? Who are the shareholders? Whether any institutional or any other corporates, the share capital is there, or individuals like that. So that the company which is going to take the CIRP company through resolution plan, they have to submit the corporate documents also and the authorization document. So along with the resolution plan, they have to submit a authorization. Otherwise, if at all the authorization is not there, how they are submitting the resolution plan? Proper authorization is also very much required. That is a power of attorney. So once the managing director is having the power of attorney to execute the document on behalf of the company, the and that is to be approved by the board of directors, whether it is there or not, you have to verify. If at all unauthorized person of the company submit the resolution plan, it is invalid. Not only that one, authorized signatory. So whatever the authorized person is there, that authorized person's signature is also to be attested by the board of directors. Then only they will verify and cross-check and a consortium agreement. If at all the company is going to take the CIRP company in a consortium manner, two companies may take one CIRP company also, or inter-sea agreement, etc., etc. And the financial documents also they have to submit along with the resolution plan. Resolution plan along with the audited financial statements. They have to submit their company audited financial statement. So, what are the audit observations? Any the observations are there or adverse observations are there or not? Tax returns, their tax returns, whether any tax dues of the particular prospective resolution applicant is there or not, that is also to be verified. Their net worth certificate, the net worth of the company, the net worth of the directors are also required. Why? If at all the company net worth is negative and the director's net worth is negative, that company is not suitable to participate as a prospective resolution applicant. And sometimes the banker's certificate also. Why banker's certificate? If the company is availing some loan with the bankers, their banker's certificate, they are following the norms. They are not a default for the last 5 years. Like that, whatever the observations are there, whether it is a good or bad, that is also to be mentioned. And a legal document, litigation disclosures. So whenever the company going to acquire the CIRP company by the particularly prospective resolution applicant, whatever the company in their company litigations are there, that is to be disclosed. Otherwise, they simply whatever the good thing is, they will mention definitely along with the litigation. If at all any arbitration cases or matters are there in that prospective resolution applicant company, that also to be mentioned. And the regulatory proceedings, if at all regulatory is also proceedings are there, that also to be mentioned. Criminal proceedings against the directors in that prospective resolution applicant company, then that also to be mentioned. That also to be mentioned. Part 7, evaluation matrix verification. Evaluation matrix verification. So once you have verified all these things by the resolution profession, then you have to verify this resolution plan with the evaluation matrix. Sir, are you getting my point? Or any doubts are there or any discussions are required, sir?
No
Sir,
doubt, sir.
okay. So the evaluation matrix also to be verified by the resolution professional of the prospective result. What is the object of assessment? Why we are using the evaluation matrix? Why we have verified the resolution plans? The objective is transparency. I should not select a wrong person. If at all I selected a wrong person, if the company is handed over to the wrong person, again the CIRP problem or liquidation will arise. So I have to hand over this company into the safest hands. Avoid subjectivity base. So once the evaluation matrix is there or are quantified, there is no scope for subjectivity. There is no scope for subjectivity. So that's why the avoid the subjectivity. To avoid that subjectivity, evaluation matrix is defined and marks are given accordingly. Apply matrix uniformly. The same matrix to be applied for all resolution plans received by the resolution professional. He should not one matrix, different matrix for a different this one. Once he used one standard, particularly matrix, it is applicable to all. Maintain documentation. Whenever you are giving some marks and all these things, whatever your observations are there, mention clearly. If at all 2 or 3 or 10 or 20 pages write-ups are there, no problem. Later on, if at all anybody questioned, you have wrongly evaluated means, then you are in a position to answer properly. So that's why ensure transparency, avoid subjectivity, apply matrix uniformly, or maintain documentation. Next, common parameters. So, particularly, upfront of cash recovery is the best method. Then no monitoring. He will take care of the company. And whatever the amount received, the resolution profession through COC, they will appropriate the amount to all the stakeholders as per the eligibility or waterfall mechanism. So upfront is a preferable. Some less amount also no problem. Not too wide difference. And the NPV of payments. Net present value of the payments. Some of the people, what they are doing is, after 1 year, I will pay 100 crores. Sir. After 2 years, I will pay 100 crores. After third year, I will pay 100 crores. The 3 years with the discount rate, the present market rate of interest, you value the net present value. What is that present value? Suppose the present value comes to the 240 crores. But one person today upfront is going to pay 242 crores. Then give it to that person, 242. Even though 300 crores appears to be higher amount, but while you are factorizing the net present value, it becomes a 240 crores. And equity infusion. Whenever you are handing over the company, the prospective resolution applicant should bring additional equity. Otherwise, restructuring or rehabilitate the problematic company is a big problem. Is a big problem. So the equity infusion is required, compulsory, either by way of the additional machinery or some additional building or some additional working capital and business turnaround capability. The capability of the promoters. In how many years the company will be turned around? If at all the company turnaround is 1.5 years, then it is a good proposal. Another person told 2 years, but a little bit amount of difference is there. The turnaround capability you have to take into consideration. Management structural position. If at all a line function is there, or staff function is there for line function and staff function, the organization structure, that is also to be taken into consideration. If at all the company is going to implement the earlier no departments, now they are going to segregate the department, and each and every department some staff person is there, competent person is there. Definitely it is good proposal. Definitely it is a good structure also. So with this, I'm concluding. But here, the resolution plans submitted by the prospective resolution applicant to be vetted, to be evaluated, to be verified by the none other than the resolution profession. If a resolution profession is verified correctly, the transparency, the authenticity, the accuracy are very, very important. If at all you have not verified, simply verified the particular evaluation matrix, then that is not correct. That is not correct. Today, I have seen, because some of my friends are also they handling CARP cases. In the CARP cases, particularly evaluation of a resolution plans, not up to them. I'm not a big person, but some basics are required. So that's why in one company of Hyderabad, the one person submitted 250. He is a strong net worth and other things, but the resolution profession finalized it for 72 crores, which is not correct. Which is not correct. Value maximization principle is completely avoided. And now the prospective resolution applicant submitted a appeal to the Honorable Supreme Court. So these people, they have some hidden agenda. That's why these people, they have allotted that company with a lower value. That is 72 crores. Instead of a higher amount. So that's why the resolution plans are to be verified properly. In the resolution plans, to verify properly, you have to prepare the checklist for each and every area, whether it is a financial area or how he is going to their organizational structure and how he is going to bring that amount and what is the period and how many years the company will turn around and what are the latest technology that are they're going to implement that one. All these things that you have to verify. Otherwise, a failure of the verification leads to lot of problems. Today, even IBBI also, they are raising the question: why you have accepted that 72, why not 250? What is the reasons? Tell me the reasons. Then the particular IP is unable to tell about that particular the this one. That's why the resolution plans are to be properly verified by the resolution professionals. Otherwise, it leads to complaints. And the some of the people, particularly the PRAs, unsuccessful PRAs, they are approaching the NCLT or NCLAT also. So that should not arise. That should not arise. But this is not a rocket science. This is a simple science. But at the same time, while evaluation of the particular resolution plan, you should act as a business. Even though you are a law expert with regard to IBC, the regulation and code, you should act as a businessman. If at all that a company is given to XPRA or YPRA or ZPRA, who is the best person? Who will continue the company in a sustainable manner? Who will give the good results? Who will bring the expansion of that particular company? And how it impacts on the economy? All these things to be verified perfectly. Then only the success rate. Today, what are they? Even most of the people, particularly my friends, I am talking about my friends, the resolution plans are not up to them. A sketchy one. Okay. In bigger companies, all areas are required. Even small companies also, some standardization is required. Nobody should comment on my finalization of the resolution plan. Once I finalize means not by me. I'm only the supporter. I'm the only the facilitator to the COC. But the full information to be provided by me only on their own. COC will not allocate the marks and other things. But I'm responsible for that. Even today, in that particular case, what I told earlier, 70 to 250, then the COC is simply told to the court, I have not involved in the allocation of marks. The allocation and evaluation done by the RP. He has not brought to our notice whatever the additional marks he has allotted. Then they will pass on the bug to the RP who is handled that evaluation process. But a decision based on the inputs. Once GIGO, garbage in, garbage out. Once the garbage is submitted by the RP to the COC, the wrong resolution plans are to be approved by this one. That's why that evaluation process is one of the important area. So here, that's why this is not simply a postman. Whatever the plans are received, and on the top, you put the evaluation and award some marks and throw it on the COC table. That is not correct. You are the judge. You should know who is the right person to take over the company, to handle the company perfectly, and sustainability in the long run. To that person only, you have to hand over the company, not to the wrong person. Once you have handed over the wrong person, then the problems will arise. The same problems. So that's why the evaluation is careful, not careless. It is to be handled carefully, not careless. And the quality is not up to them. The quality is not up to them. Any clarification, a doubt, sir? Sir, madam,
No,
any
sir.
doubt?
No, sir.
Tell me, sir. Any clarifications? That here the checklist is to be prepared for the verification of how to verify the resolution plan. If you prepare the checklist, according to checklist, if at all documents, all parameters are satisfied, then accordingly award the marks. Today, tomorrow, anyhow, I'm going to discuss about the evaluation methods. So, the out of 100, how you are going to give the marks? Some of them are subjectivities. Then subjectivity. Subjectivity means simply that also depends upon the data is available. So the subjectivity means simply we should not award marks 10 out of 10, 20 out of 20, 30 out of 30 like that. Some rational is required. Rational thinking is required. So that's why what I told is once the resolution plan is handled perfectly, the success rate of the CIRP depends upon the total process. Whatever the total process is, depends upon the end result. The end result is nothing but proper verification of the resolution plan. Proper verification, finalization. The finalization of the SRA, successful resolution, among the people, among the SRAs, if at all you have choose the correct person and he will handle the company perfectly in the long run, in the coming years. That is the goal of the particular RP. I should not hand over the company to a wrong person. Once I have given to a wrong person, then the same story. Again, that story starts with the financial creditor or operation creditor. Then they will go again to the particular NCLT, etc., etc. So that's why all parameters verifiable. It is not only subjectivity. It is verifiable data is available. Some of the people, the PRAs, they will tell, sir, this company now last 2 years it is not working. You give me that company, I will reshape the company by additional pumping of equity. Then the next question to be asked by how you are going to get the funds, additional pumping of funds in the company by way of equity. Tell me the source. What is the source? Then if at all confirmed sources are there and you are believed and the COC is also believed, then that is the right person. Some of the people on paper, they will tell, but they don't bring. Only one example I am quoting here. In Hyderabad NCLT, that particularly the adjudicating authority, honorable adjudicating authority of the NCLT, he is raising his tone and asking that the RP, why the company is not handed over to the successful resolution applicant, SRA, successful resolution applicant. Why delay? Lot of delay was happened. Even though you have finalized, the resolution plan and approved by the COC and finally approved by me. And till date, why you have not handed over that one? Then the RP argument is, sir, after that order, till date, he is not coming to the location of the company. The location of a company is located at Andaman Nicobar Island. Andaman only. Andaman. That is a factory. Then the adjudicating authority in a harsh manner. So next, I'm postponing this case to the next so-and-so date. Before that, if at all the successful resolution applicant not taken over the company, then please inform to us whatever the cost, whatever the penalties, and whatever the time loss and the time value, all I will impose some penalty to the successful resolution applicant. Anyhow, some guarantee is also given. We will invoke the guarantee and whatever the amount to be paid to that particular the CIRP, we will recover from the successful resolution. Because here, what was happened means some of the people, on account of anxiety or on account of the wrong decision or quick decision, oh, I am ready to take, and they offer more. Later on, over a period of time, slowly they are observing whether it is a viable company or feasible company or demand and supply gap and all these things. So thereby it is difficult to run the company. They made the conclusion after submission of the resolution plan or finalization of resolution. That is not correct. Adequate time is given. So then if the NCLT ordered that IP or the RP to invoke the guarantee means, then who is a loser? The successful resolution applicant. He is telling, the RP is telling, sir, he is after 30 days also he is not visited. And whenever I am asking, after 10 days we will go to Andaman and we will take over the company like that. If at all that much confidence is not there or homework is not done by that particular successful resolution applicant, then the total process time is a waste, money is a waste. And had it been to the other the prospective resolution applicant, then by this time the company will be restored and start its operation. But here, the identification of SRA is also why on that day, the adjudicating authority strongly in a harsh manner asked the RP means, you have not properly evaluated the resolution plan. You have not properly evaluated the resolution plan. Once you are done that activity properly, this situation is not arise. And later on, what was happened, I don't know. And whether the NCLT also informed to IBPA or not, that also I don't know. So this type of situations are coming. And some of the particular commercial wisdom concept also. Once you followed correctly, the shield of the commercial wisdom will be available to you. Otherwise, it will be broken. So the shield of the commercial wisdom is available when once you have addressed the issues properly. Once the issues are not addressed, as I told at the initial time, that 250 worth of company has given to 72 crores. 250 crores worth of company, 250 crores, the prospective resolution applicant not finalized and only 72 crores. Now it is a questionable. Here we should not talk about the commercial wisdom. I'm having the right, whatever my decisions are correct, the COC should not talk like that. So that's why these type of errors should not arise. And you should act as a business. You should act as a business. Then once you are acted as a businessman, then only you are going to evaluate properly, and the company will be handing over to a safest hand, not wrong hands. So that's why this is in simple about the how to verify the particular resolution plan. Tomorrow I will discuss about the evaluation matrix. Even the evaluation matrix of 4 or 5 parameters are there, some people, they are simply marking without going in-depth analysis, in-depth of each and every parameter. What is a parameter? Why I am giving some X marks or not Y marks? That I will discuss tomorrow. Thank you very much for your patience listening from 2 o'clock onwards. And good night to all.
Thank you, sir.
Okay.
Thank you, sir.
Thank you.